please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Mr. Rajnish Kumar, State Bank of India, Chairman, State Bank of India, joining us live now to take some questions. My colleague Lata is here as well. Lata.
Thanks, Prashant, and thank you very much, Mr. Kumar, for joining us. Well, first up, sir, I mean, it has to start with PNB, unfortunately. Are the contours of the problem clear? It is only 11,400, or is it that all of y'all have gone back and looked at your links with the industry, and should we be prepared for any bad news, any other things that may go NPA?
So I think what is the exact number? PNB is in a much better position to tell you that number. But as far as our exposure is concerned on Punjab National Bank, so that number is very much confirmed, calculated and advised to the Punjab National Bank. And our exposure on one of the companies, Gitanjali Gems, that also has been crystallized and there was no issue around that. So our numbers, our claim is clear, but because there are some secondary market purchases, so double counting has to be avoided. And that is where I think only PNB can give you a confirmed number.
No, I agree, sir. In PNB, what we have got is that 11,400 odd crores of one kind of exposure and another 1,700 crore exposure to Gitanjali. So we are working with something like 13,000 crore. My question is that are there other diamond companies, or either because of a follow-on effect or because all banks have gone and done a thorough search? Should we expect that there will be other, either wrong cases of lending or manufactured LOUs without a credit memo? Any such problems are they likely to emerge? After all, the IBA met over this issue.
So I don't think so. Okay. It seems to be a case confined to the particular branch of Punjab National Bank. At least for State Bank of India, I can confirm that there is no such issue, no such problem. And I'm sure by now all other banks have also would have reviewed their portfolio and would have arrived at the similar conclusion, because if something was wrong somewhere, by now I presume it would have come out.
Okay. So the other thing that has come from the Reserve Bank, I believe are circulars telling banks that they have to connect their SWIFT communication system to the core banking system in cases where they are not. I know you all are not involved. Any other instruction from the regulator on this?
No, other than whatever they have said about the safety of the SWIFT and the controls which need to be in place. So nothing else we have heard as of now. And
deadline of April is possible to do this. It's not very difficult for the entire banking system to comply.
Very much.
Okay.
Very much.
Has the regulator or the government or PNB itself decided who will pay that 11,400? Bankers, when we last heard, there was still some argument between PNB on one side and other bankers.
So I am very confident that things will get sorted out between PNB and the other banks.
Okay. You are expecting them to pay you?
That is my expectation, of course.
Okay. No, but clearly the government or RBI have not come out with anything? They have not intervened?
Not to my knowledge.
Okay. Well, clearly the government, the RBI put out a release saying that they have not given any instruction, but that was about 4-5 days ago. So I just wanted an update. So now to come to the other big problem which actually is hurting all banks, all corporate-facing banks, is that February 12th circular of the Reserve Bank on NPA resolution. What, according to you, is the impact on your bank itself? Should we see some of the SDR, S4RA cases getting recognized as NPA either this quarter or next?
Definitely. And But in any case, the accounts which will be recognized as NPA, they were very much on the radar and even before the circular came. And the impact in our case, we have estimated, it's not going to be as large. In my earnings call, I had indicated that what would be our gross slippages, which we had said around 2% in the next year. So that's not going to change much.
Okay. All those stressed cases are included.
Whatever recognition we have to do, we will do in. Yeah, all such cases are included, and whatever recognition we have to do, we will do in March quarter, because RBI guidelines and circular is very clear that no divergence or any such thing will now be tolerated or accepted. So I think all banks will have to be very, very cautious that they recognize the asset as impaired in time and as per the regulatory guidelines. So what I had said, again, just for the sake of reiteration, that our estimates of what will be our NPA are very much available. Only thing is that they cannot be uniformly spread across the quarters. So one quarter you may see elevated number, in the other you may see much less number. So that is all. But the major recognition has already happened, and as a result of these guidelines, whatever is remaining, that will happen for State Bank of India in March.
Okay. So, but they have given you 6 months for cases over 2,000 crore to either be resolved or taken to NCLT. So, should we expect something in the first quarter, or are you going to advance even that recognition?
No, recognition will happen as per the norms, which is 90 days.
Okay.
Now, as per this circular, the definitions are very clear. They were clear also. What circular says is that as soon as any term loan installment is missed, even for a day, principal or interest, so at that stage you start thinking, and the date of reference start from there, 1st March, or for other accounts, if it becomes as and when it comes in, SM is 0, and for 2,000 crore and above exposures, the meter, if I call it, it starts from that date rather than waiting for the account to become SMA 2 or NPA. So that is the only thing, and 6 months is the outer limit. If we feel that resolution is not possible, or we have to ultimately refer to NCLT, and outside NCLT resolution is not working out, so it can be referred earlier also.
Okay. To come to the earlier part of your answer, that if a loan is missed on the 31st day itself, you have to start taking action. Do you think this entire process that has been set in, while it is very healthy perhaps in the long run, might also lead to some acceleration of NPA recognition?
Yeah, that will happen. But as I said, that again, the NPA recognition happens on the 90th day.
Yes.
So that has not changed.
Yes.
So if an installment is missed, principal or interest for a day, the account straight away doesn't get into an NPA category.
Yes.
The only thing is that your action plan should start early and immediately why the installment has been missed. If it is just a temporary one-time problem once in a year, I don't think any major issue. But if it is happening repeatedly, for example, then definitely it should be a cause for concern. And the intent is that if the problem is recognized early, the possibility of resolution is very much there before the things become too late. So to that extent, I don't think that it will have any impact on the NPA recognition, because 90-day norm still remains. Only thing is you are advancing the action much earlier to the account becoming NPA.
Okay. For the system as a whole, do I understand you right? Anything that is S4A or SDR is NPA as of this quarter?
May not be necessary, because suppose we had decided on the SDR, say for example in January, right? And only there is a default of 15 days, so it will become NPA in April, 90 days overdue. So it is not NPA on 31st March, it becomes NPA in the first quarter. But only thing is the standstill which was available will not be available anymore. And any resolution plan, whether in NCLT or outside NCLT, the account will classify it as substandard in the first instance, and you have to provide.
Okay. I just wanted to ask finally on this issue, the 525, I was last given to understand that bankers have asked IBA to clarify from RBI whether 525 is going to be reinstituted at all. Is that plea being made to the RBI? And more importantly, what happens to cases where you have already given 525? They will come after every 5 years for a reset. Nothing happens to that classification, does it?
So I think that is a clarification which IBA will take from RBI. But if you ask for my opinion or view in the matter, 5/25 worldwide is the norm for financing of the infrastructure projects, because a infrastructure loan cannot be paid in 10-12 years. So hereafter, whatever project loans you give, they will be all under this dispensation where you reset the terms, spread, interest at the pre-decided frequency, and amortization is depending upon the concession or the life of the project. So the amortization has to be for a longer period as far as the project loans go. And I don't see anything wrong in that. That is the position we always had maintained earlier also, and it should not be, at least going forward for the new loans, it is not a restructuring. For the old loan, there may be a debate because you had earlier asked for, say, 10-year period, and now it is under 5/25.
Sure.
But I think whatever has been implemented has been implemented. Whatever has not been implemented will get impacted by the new guidelines.
Okay.
That is my understanding of the situation.
Okay.
But we will wait for RBI clarification.
Yes, sir, we would. I just wanted to know, have you a new guidance for provisioning for credit cost?
No, I had said that March 18, I'm not giving any guidance. As I said that we will be much more upfront in providing and recognizing whatever remaining is there. And next year, I said gross slippages 2% and provisioning also 2%. So I don't think there is going to be any major change in that. That is my assessment of the current situation after analyzing all the large accounts in detail.
Okay. Sir, my colleagues also have a question for you. Please stay on, sir. Prashant.
Mr. Kumar, hi. Morning, Prashant here.
Yeah,
so
sure.
Two-part question, sir. Before this entire PNB episode happened, I mean, there was this general belief in the system. I mean, when I say the ecosystem, banking ecosystem, that maybe the worst in terms of NPLs, etc., even NPLs coming to light and then being recognized, etc., that is behind us. With this new circular, RBI circular, are you confident that we are on that path? I mean, that we should think about this entire process in that same way, that things have been recognized, resolution is underway. That is one. And second, the circular puts the onus of resolution on the bankruptcy court. Are we putting too much pressure on the bankruptcy court itself? Because, I mean, it will also be tested, right? I mean, some of the large cases will have to be credibly settled. There will be appeals in the Supreme Court. So how do you see that getting established, the efficacy being established?
Right. So to answer your question, one is that PNB's case is more an operational risk, not a credit risk. Whatever has gone wrong, it is about the weakness in the operational risk management. That we have to keep segregated from the credit risk.
Okay.
Credit risk, as I said, that after March, this 17 review also, and the recognition part of all the NPAs up to March 17 has taken place. Wherever there were divergences have been declared, and going forward, the new circular has come. So certain cases where a standstill was available, cases of SDR or S4A, so that standstill will not be available. So these accounts will get recognized as NPA after 90 days delinquency. The action plan to correct that will start on day 0. As I said, that anybody who misses one installment by 1 day or 2 days, and we have to think that what is going wrong or what resolution is needed. Now, to answer your question on the insolvency and bankruptcy court, that is the only way forward. The law will evolve, the processes will evolve, but internationally and globally, any capitalist system to succeed, you have to have a strong bankruptcy process and law, and only then the cleanup of the system can happen. So effort would be that in those cases where matters can be resolved and are expected to give better result than the insolvency process,
Sure.
then banks will go for that process. If that process is likely to result into a suboptimal recovery as compared to expected recovery in NCLT, then we go for NCLT. So there will be a choice what to do, and that will all depend whatever is the best resolution in the assessment of the lenders.
Okay. Mr. Kumar, just had a quick question which is news based. You know, OBC is in news today and it's down in double digits on fears that there is a fraud which is emerged in Simbaoli Sugar. Do you know if you have exposure to that company in particular?
We may be having some small exposure, and but not a very large exposure, that I am sure.
Okay. I just had one quick follow-up question. You did mention that post the RBI circular that came out on the 12th of Feb, whatever needed, whatever incremental recognition would be needed would be done in the March quarter, which is in Q4. So are we looking, or is there a possibility that maybe the numbers could probably be another loss this quarter simply because of, say, a higher provision figure based on gross NPA recognition based on the RBI circular?
So at this stage, I would not like to make any guess because our internal calculations are still going on. But when we talk about the quarterly performance, one big element which we will have to be mindful of, the increase in the yield where mark-to-market provisions will hit most of the banks, and how much that will be, that is still not known. But that is one factor more than the provision, which will impact the performance of all the banks, not SBI alone, but we have the largest treasury. So impact on us is always more than others.
Okay. Yes, sir. We saw that 3,400 crore number for the third quarter. Mr. Kumar, now you may have a fair assessment of how much of haircuts may be needed in the first 12?
A few more accounts are yet to be, the bids have yet not come, and they are still away, but the banks have provided almost 60%, 50% was mandatory. So the gap in provisioning may not be very large. That is my assessment of the situation, and particularly because the steel accounts, which constitute a large chunk, they are the resolution plans which have come. So that gives me that hope that on an average basis, we may not be much off the mark. And if there is even some shortfall, that will not be very significant if we have already provided 60%.
And for the balance 28 that went into NCLT in December, what are the likely haircuts?
Again, like in the second list also, in State Bank of India, we are holding more than 60% provision, but they would be smaller accounts. So the recovery chances in bigger accounts of steel, there the recovery has been much better because of the turnaround in the scenario. For mid-size accounts, the recovery may not be as high, but still a 60 to 65% provision may be just adequate, and if there is any gap, it will again not be as significant because the amount involved itself is will be much smaller than NCLT 1 list, which had some very large exposures. So recovery in the NCLT 1 list is very, very crucial for us.
Okay. So finally, power. We heard that NTPC put out a tender to buy, and a lot of banks put in stressed assets when NTPC agreed to buy. What is your sense that you may end up in terms of stress in the power sector, gas-based and thermal? Are we likely to see more NPA recognition there?
Gas-based, I think all accounts would have been recognized by now as NPA.
Okay.
Luckily for State Bank of India, we did not have many exposure excepting one.
Yeah.
And that in any case is owned by NTPC and GAIL.
Yeah.
So other than that, we did not have any gas-based exposure, but power sector, yes. If there is any sale of the asset, as of now, there may be some losses even in that portfolio. But power sector, if we are able to hold on for some time, as like steel, I see much better recoveries in power sector because the price on the exchange itself is showing an upward trend, and the summers are still away.
Okay, that's good to hear, sir. Final question. You know, where are you on the capital position? Is there enough left for growth because there are these accelerated provisioning coming in?
No, I think we are all right as far as the capital is concerned. Our all the ratios are much above the regulatory requirement. So at least State Bank of India, we are in a position to fund the growth, and whatever capital, in fact, government has provided, 8,800 crore, which will come in, so that we are just keeping aside for the growth and not using for provisioning or anything, because our ratios are much high.
Okay, sir, but what about the industry? Because as soon as the February 12th circular came out, a lot of brokerages thought that 2.11 lakh crore is going to be completely inadequate for the system. A lot of people were calling for exactly 50% more, at least 1 lakh crore more of capital. What would be your numbers?
I think it is an overestimate. 2.11 lakh crore is a big number, and in the first year, I think about 50% only has come.
Okay.
So 50% more is available. And going forward, for all the banks, because SBI always is the mirror. So I have a feeling that March 18 will not be good for the banks, but the next year onwards, the gross slippages as well as the credit cost will start coming down. So there will be some internal accruals available apart from the remaining amount of the capital which government will infuse.
Okay.
So somehow I'm never so pessimist as other people are.
All right.